Hey, Mike Swanson here. I want to do a quick video overview of the individual mining stocks. It's easier for me to do a video in order to examine a sector than post up 30 charts all at once. But there's been a lot of talk about gold, and it's a sector that I enjoy trading and investing in. For trading purposes, it moves. The mining stocks move a lot. You don't need to be buying these triple ETFs that decay over time, because the individual mining stocks, they move much more than the stock market does and most stocks do. And gold itself has a negative correlation with the US dollar and with the stock market. So just from that, from a long-term investment standpoint, it can act as a safe haven in times of trouble. And during such times, I believe it's going to actually become a necessary investment. However, right at the moment, I don't think we're there. We had a wonderful rally in 2016 in gold and in the mining stocks. But in this August, as you can see from the XAU mining stock index, there was a breakdown. And mining stocks dropped very hard. Now, as I do this video, gold is trading in a very narrow range the past week. Support at 1200 and resistance at 1210. Very, very narrow. But the ranges above that are the more important ones, and that's support 1180. If we break that, you can expect gold to go down to 1150, and resistance around 1120. We break that, we're going to probably go up to the 200-day moving averages and come back down. Because of what I see here, I'm going to show you. Newmont is the largest mining stock, and the mining stocks tend to lead the action in gold. So if we're going to see a sustainable rally in gold, what we need to see are the mining stocks also be in a position for a sustainable rally, and they're not. Here's Newmont, which had a big breakdown. It's fallen from $41 in April down to testing 30 and now going sideways. And Newmont's a stock that's not in a position to rally back up to 37 in the next couple weeks. To get into a big bull run, what Newmont needs to do is consolidate. Needs to build a base after this breakdown. That's a process that could take several months. And we don't know from looking at this chart. Newmont could break 29 and fall further before the end of the year. So I say this to tell you that even if gold were to go through 1220, I don't think the gold stocks are going to go back up to where they were in April. They would bounce, rally. Newmont could go to 33 or 35, then come back down. What I'm trying to say is it's going to take time for this sector to really recover and form the base necessary to have a real sustainable rally. And if we go lower, then it's just, I don't think they're going to crash like they did in 2014, but it's just going to take time, and that's the thing we need to really recognize. So let me just quickly, I'll go through the individual stocks, and I'm ranking them by volume. In Barrick is where there's some positive things to talk about, because Barrick had a huge volume surge after lagging gold and the rest of the sector for a very long time as it merged with Randgold. So that's good to see Barrick start to perform better, because it's been a drag on many of the gold stock ETFs. But here's KGC. That's not a stock that looks like it's going to go back up to where it was in July in the next couple of weeks. It's a stock that looks to me like the trend is sideways to down a little bit at the end of the year, and then we can see what it does next year. And here's Goldcorp closing on a low on Friday. Here's AUI. Looks like to me that's a stock that's going to go sideways. Here's Newmont, I already talked about. Here's EGO in a sideways formation. New Gold performing terribly. IM Gold really performing terribly. Here's a stock that has popped up, but it's just a smaller stock. Here's Hecla Mining, not performing that well. Here's Tahoe Resource, had a big breakdown in September. Here's one that is performing better, but this looks like a sideways formation. Here's Gold Fields of a horrible breakdown, now going sideways. Coeur d'Alene had a big breakdown in July and August, now going sideways. Here's Sibian going sideways. Here's AEM basically going sideways. AU is actually got the best looking chart out of the ones we've seen so far because it is near the 200-day moving average. It could consolidate and conceivably break out. But that's the only stock that I can say that about so far. And here is Randgold that has popped up with Barrick, and that's a stock. The bull case is it pauses here, builds a base for a month or two, then breaks out. But it's time. Month or two is what we're speaking about. Here's Harmony, probably in the same situation. Another stock, the same situation. Here's the best performing stock that we've seen so far in Sandstorm, Royal Gold, Franco-Nevada. The bottom line is the breakdown in August. Here's one that has popped up on Friday and has a chart where we can say, yeah, here's one that could go up to a high. But here's the thing about this one. It's a small cap. And it's funny, it's the exploration stocks right now where the action is really happening, where there is action. And here's another one, an exploration stock near high. Here's a Cisco royalty company, just lagging. And it was one I really liked when I owned it, but I sold it. And it's one I'm looking to get back into as an investment play. Not just a trade, but I think it's too early to do it. Here's one that is performing better after the big July breakdown. So you get the idea, and I go back to the XAU and just tell you the basic reality is that the XAU had a tremendous run in 2016, and then it went sideways for about 2 years and broke down in August. And that breakdown was a serious breakdown, and it's just going to take base building time for the damage to be worked off. And gold's really the same story. Even if gold closed above 1220 and made a run back up, it probably wouldn't even get to 1300 yet, and would come back down, at least spend months between where it is now and whatever the high below 1300 would be before it would break out and really go into a run. So I'm just saying it's time. Time's the big factor of gold stocks and precious metals. Yes, I think they're going to be a wonderful investment, and there will be a moment in which they outperform the stock market substantially, not just for a couple months like they did in 2016, but for a couple years. That's why I watch this sector, because it's a wonderful sector. When it goes up tremendously. So if you want to play it to the upside, I just think it's a trading situation right now if resistance is broken. Otherwise, from an investment standpoint, I still think it's time to wait, and that's fine. And we'll keep our eyes on this sector, because when it is the time to buy, and I'm just not saying buy for a trade, but buy to hold for years. And I thought that time came in 2016, and we consolidated to try to work that off. But instead of breaking out, we broke down in August when the U.S. dollar rallied, when emerging markets took a nosedive, and when the trade wars began. These things are still in place, and now we're facing, from what happened last week, a more hawkish Federal Reserve. So from a trading standpoint, can gold buck those trends? Yes, for a short period of time. Gold stocks can move up for a short period of time, but right now I don't think we're going to see a rally that can last more than a few weeks in this sector until more time goes by, and we could break down. Gold looks better than the gold stocks, but that's how it looked on Friday, but one down day in gold would change that. So I'm watching the action day by day. I can't really make a determination of the short-term outlook for the next 2 or 3 weeks, but I'm more speaking of the long-term outlook in this video. And it's not, and I'm doing that not to get people too excited in this sector if we do turn up. But also not to get too pessimistic either, and to realize it's a time factor, not so much price factor, that we're facing with mining stocks. It could be in December when these things really are in a position to do great. If we turn lower here and move down, I think December could be a washout period. And so if we turn up, then it's going to be more base building. So let's see what happens and keep our eyes on this sector together.